Hello friends, welcome back to my channel. There are various investment products which are available in the market. Certain new products are getting launched. So it's very important for all of you to understand the various products which are there in the market. These are kind of regulated products. So let's dive into it and let's look at the various products which are available. So, if we take a look at the regulated products which are defined by the regulator SEBI, right? So, mutual fund is one of them which is very popular, and of course, the minimum investment in mutual fund is as low as $100, right? And then there are different other things also around. So other than mutual funds, portfolio management services is another piece, which is again a product which is defined by the regulator, right? So in addition to these two pieces, in PMS, of course, there is a lot of flexibility. The regulation is relatively less, but again, the minimum investment is quite high, 50 lakhs, right? Then there are different, taxations which apply to different products, right? So broadly, I'll touch upon the different pieces which are there, which are defined by SEBI, right? So of late, we have this specialized investment fund which has come up, wherein the minimum investment is around 10 lakhs, and we also have alternate investment funds, AIF, wherein the minimum investment is 1 crore. Now, these are all different products which are as per the definition from the regulator SEBI, right? So we'll take a little deeper look into each product. Of course, a mutual fund and is a product which is known to almost all of you. So we cover a little bit of different aspects of all the products, right? For mutual funds, yes, it's for everybody, to invest, starting from a low investment scale to a very high HNIs as well. If you redeem it for equity, the taxation is 20% short-term capital gain, and for debt, it goes as per the slab rate, which is the income tax rate for the investor. For long-term capital gain, equity, of course, gets taxed at 12.5% beyond the permissible ceiling of 1,25,000. For depth, again, there are slab rates, so I'll not get deep into the taxation bit. Derivatives is only allowed for hedging purposes, which means like it's more like if a position is taken, buy position is taken, only hedge as in like the short position is allowed for the same product as a hedge, right? So there are many other guidelines which govern mutual funds. So in terms of strategy flexibility, the flexibility is not much in the hands of the fund manager. In terms of liquidity, of course, there are stringent regulations and guidelines from SEBI. So it's highly liquid, I would say, in terms of redemption needs, right? Now, when we look into PMS per se, the minimum investment is 50 lakhs. It's basically for HNIs. STCG is taxed at each transaction, right? So because PMS is not a trust like mutual fund, so any transaction, any buy sell involving any transaction, it comes under taxation, and so the tax benefits are not much in a PMS. So STCG is applicable, LTCG is applicable. Derivatives is only allowed for hedging in PMS as well. In terms of strategy flexibility, yes, there's a lot of flexibility given for the PMS. So flexibility is there for customizing the portfolio. However, there are lock-in periods which are low, of course, but there are restrictions, right? For a high value portfolio, It cannot be redeemed every now and then. So there are certain restrictions in terms of redemption and liquidity as well, right? So then we have the SIF, which came in, and then of late various mutual fund houses are also coming up with different products. So let's take a look at the SIF. So SIF is a middle ground, between a traditional mutual fund and a PMS, offering some flexibility. Of course, the regulations are there, the tax benefits are there, same like a mutual fund, because this is also operated by a mutual fund, and it has a tax structure similar to a trust. So again, if you look at the differences between a mutual fund and a SIF, the minimum investment is 10 lakhs. Of course, it qualifies as HNI for an investor who is investing 10 lakhs. STCG, LTCG are same as in mutual funds. Now the derivatives part. Right. So here there is a flexibility given by the regulator so that the fund managers can take up to 25% naked shorts plus the hedging bit. So this put together, gives some flexibility and can and gives some different kind of a performance, right? When we take a look at the strategy part of it, yes, it is at present defined as long short, both are allowed, and sector rotation is allowed, and liquidity is moderate. Of course, the features are kind of close-ended, but there is enough liquidity. Maybe it will vary from fund house to fund house, but more or less we can say it's very close to open-ended. Not much of a restriction. Now, when we come to AIF, alternate investment funds, the minimum investment itself is 1 crore. It's mainly for HNI and ultra HNI category. And of course, the depending upon the type of investment, as LTCG, STCG are applicable. Derivatives are of course allowed. There is no restriction in terms of the percentage and so on. And the strategy flexibility is very wide. Even private equity exposure is allowed, hedging is allowed. There are three main categories: category 1, 2, 3, which are there. The risk profile, of course, varies from category to category, and of course, it's a close-ended product. So mainly 5 years or 10 years is the time frame that one looks at. Now, when we move to the different categories of SIF, so mainly, we have equity-oriented SIFs, depth-oriented SIFs, and hybrid or multi-asset SIFs, which have been defined and which have started coming into the markets. So in the equity, we have a long short, we have X top 100 long short. That means excluding the top 100 shares. So it's basically the mid and small cap which is there, and we have the sector rotation long short. So these are the three main types of equity oriented SIFs that are going to come into the market. For depth, again, it's on bonds, credit instruments, and other things, and of course derivatives are allowed here. And for hybrids as well, it's a blending and strategically allowed positions. So it would be equity, depth, long short, and multi-asset long short. Right now, to begin with, for multi-asset, it's mainly around equity, depth, and REIT, real estate, and the infrastructure trust. Those things, those positions are going to be taken. Gold, silver is not included to begin with. Maybe as we have more funds coming in from different fund houses, we might see positions in gold, silver as well. Now, overall, broadly, if we take a look at the SIF, it's basically designed to generate a income across different market cycles. Like if you take a look at equity, of course, it should perform well during volatility, because the derivatives section would be taking some strategic bets and also will take some opportunistic bets. So to blend all these things, it's expected that the output would be a little better. Um and it will perform well during range bound markets, volatile markets, and it should also perform well in bull phase and bear phase, right? However, if the markets are extremely bullish, it may not perform well because the normal mutual fund segments, they might do well, but overall across different market cycles and over a period of time, the SIFs, equity SIFs are expected to perform better. Now, equity SIFs come with more risk factors. Depth is, of course, with much lesser risk, and the hybrid is the midway between equity and depth. So overall, that's how the SIF landscape looks like. And we have certain products which are already launched, Quant, Edelweiss, and we see Magnum SBI, and also ITI is coming up with its product launches, and we expect various other fund houses to also come up with various SIFs. So please stay tuned to my channel for more information around SIFs, and wish you good luck and a fruitful investment journey ahead. Thank you.